This is our weekly market update where we start in the US, across to Europe and Asia, and in Australia, and we cover commodities and crypto along the way. Things are, well, complicated. Following a busy week of US corporate results, with investors concerned about the strength of the artificial intelligence trade and about how aggressively the Federal Reserve will cut interest rates. The data vacuum, because of the government shutdown, continues to add complexity, as does the China-US trade truce, which forced the US to cut some tariffs in return for rare earths for now. Another taco? Following the October monetary policy meeting, Federal Chair Jerome Powell said an interest rate cut at the next meeting in December was not a foregone conclusion. Investors had expected that move to be almost a done deal, and in remarks that cooled investor hopes for policy easing, Federal Reserve Bank of Atlanta President Raphael Bostic said that a December rate cut was not locked in, despite market expectations for a cut. And Federal Reserve Bank of Cleveland President Beth Hammock said she opposed Wednesday's rate cut because inflation is too high. The S&P 500 on Friday ended October up 2.3% for the month. That's its sixth straight month of gains, despite wobbling this week, after mega-cap companies posted mixed results. The rally has lifted the S&P 500 forward price-to-earnings multiple above 23, putting the market's valuation around its highest since the dot-com bubble 25 years ago. Hold that thought. Third quarter S&P profits are tracking 13.8% above a year earlier. More than 130 index companies will report in the coming week, and with 44% of the S&P 500 companies that reported as of Wednesday, 83% exceeded earnings expectations. The S&P 500, the Nasdaq Composite, and the Dow boasted weekly gains in their longest monthly winning streak in years. Yet, while enthusiasm at AI helped drive the S&P 500 up 90% since the bull market began just over 3 years ago, investors are wary of potential over-exuberance tied to the theme and eager for evidence that AI investments are paying off. The rest of the market, as shown in the equal weights view of the market, tells, well, a rather different story. Small caps are more vulnerable to financing costs, and they were down 2.4% in a week, and even hit the even weight S&P 500 down 2.1% in a week compared to the flat market weight S&P 500. With PEs high, the discount rate valuation elements that are derived from the US Treasury's risk-free rate are more influential than usual.